Hi, I'm Dr. B here at Verified Investing, and I'm taking a look at the S&P 500 chart today. The indices have had a lot of weakness with the current uncertainty in the markets. So I'll pull up my chart right now and show you something very, very interesting. So here's the S&P 500 chart on the logarithmic setting. You can see logarithmic here, and this is the high before the Great Depression occurred. If you take this trend line from the pivot high to the dot-com high, it comes right into the price we're trading at right now. Now, obviously, we won't know if this trend line will be respected until after the fact, but if price starts coming down here, we'll know that this was likely one of the major reasons that, on the chart at least, that we pulled back on the S&P 500. Obviously, there's a lot of other issues with inflation and the rising deficit, tariffs, and all of these different things. But look at the potential downside here. If you put a trend line, upsloping trend line here on the S&P from 1942, piercing through the Great Recession lows, you'll see that the support line is right around 2,200. Now, I doubt it gets there. That's quite a fall, but there's always the possibility, right? There's always the possibility. Go back here to the Great Depression, and you can see an 85% fall right here. 85% fall would put us significantly lower at about under 1,000 on the S&P. Again, I'm not calling for this. I'm just saying that based on these trend lines, there is potential significant downside. So with that said, my tip of the day is open some puts on the S&P. I think short term right now we are oversold, so I do think we'll have a bounce. But I think if you can find a nice entry, S&P puts are probably, long dated puts are not a bad idea right now. So take care.